Hey guys, we are back at it again this week with some morning videos. You absolute mad lads requested more, and I shall deliver more good content. Expect a morning video tomorrow and on Friday as well. Last week, we covered some information and clues as to how market makers think. This week, I want to touch on a very touchy subject that is indeed far too familiar with many of you. I want to talk about the housing crisis, and discuss what is new about this one, what is different, and most importantly, what is the relationship it has with the squeeze. This little 3-video series will each touch on a unique aspect about this current phenomenon, because I believe you need to be well informed as to the current climate in the overall economy. If you have been following this channel for a bit, you know that I talk a lot about inflation. I believe it to be a very likely problem that could cause a market crash, and consequently a squeeze. As such, much attention from me as well as others is focused on stocks, ETFs and other securities. One thing that is ignored, however, is the housing market, and the role it has in all the current events leading this decrepit economy ever so closer to an absolute crash. We are going to keep it simple and basic, warming up on a variety of things but not going in great depth about anything in particular. I want to make it a bit introductory to the other more in-depth topics we will be discussing in the next 2 coming days. Today's video will focus on laying out the current state of the housing market, and stating all the problems and developments that are of importance to us. I then will tie this to the current circumstances happening with inflation on the markets and with the issues created by the Fed in the repo market. Before we get started, let me quickly disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, who continue to support this channel. Now, let's get right to it. You will find no shortage of answers as to why housing prices have skyrocketed over the past couple of years, with the last 2 years seeing an increasing of 28% for median prices for American houses. There is no doubt that the events that took place last year did not help the common folk, but it sure did help Wall Street, as they took advantage on the instability and low-cost borrowing fees to come into this market and start spreading havoc all across. You see, institutional investors as well as corporations bought up 15% of American houses that were for sale during the first quarter of this year alone. These corporations are so serious about depriving people of houses that just last year there were stories of corporations buying out entire neighborhoods worth of single-family homes. The defenders of these corporations, typically made up of the same media that loves to call meme stockholders derogatory names and mock us, have been publishing article after article defending Wall Street. In their statements, they asses that there is no reason to fear or panic, as Wall Street is not buying out every house available in the market. The analysts did not hesitate to push out narratives, all saying that people are making a big deal out of nothing, and that we are all just being dramatic about this. I am here to wake you up from this reality, and show you exactly the nightmare scenario that is happening and you have been dormant about. What the media is saying is true. They aren't buying every single house out there. In fact, they are ignoring certain house markets, such as big, expensive and luxurious homes. They are also ignoring houses in cities and zip codes that are seeing the populations decrease. Instead, these corporations are hyper-focusing on the poor and the middle class. They are buying up and depleting houses that the average worker can get in a city with a decent paying job. Let's dive a little more into this, as it is fascinating as it is horrifying. You all know Zillow, this website that lists property prices. Imagine if every Wall Street institution have their own little Zillow. They all have a laid out system made up of algorithms that let them see what is ahead of the curve, and how they can systematically buy up houses. We know that the one thing Wall Street doesn't lack is cash. We have seen stories of companies, Zillow included, buying up property with cash up front, outbidding others by 50% on any good day. These institutions, knowing how people move and where they are likely to go, based on jobs available and distance, they can measure out on probability which properties they need to buy because they know which places are going to see an increase in population. When the young graduate moves, or the new small family starting out moves to a new city, they will find an aggravating time finding a house. All they will have is rental properties prop up, and the houses that might be available are far too high in cost, or if they find a good deal, count on a corporate investor to outbid you 100% of the time. Wall Street has all the data of how many employers are opening new jobs, where new offices and buildings will be created, where are the schools for children. All this data is scooped up, so anyone thinking they can be ahead of the curve, please wake up to reality. Now, let me come again and bring some even worse news. Let's talk about the most basic law of economics, supply and demand. The law states that the more supply there is, the less the demand and vice versa. Due to the high supply, since these properties are being bought so they can be rented forever and never be sold, you might be led to believe that the supply is so great that corporations and renters will all compete with each other to lower prices to attract demand. Well, as an article by Slate magazine quoted Invitation Homes Corporation in their message to their investors, we operate in markets with strong demand drivers, high barriers to entry, and high rent growth potential. That's right, high rent growth potential is indeed the catchphrase. The problem is so big that we are starting to see 1 in 5 houses not have anyone moving in once they are sold. This is going to make the housing market permanently more expensive. In Houston, Texas, big institutions and investors have accounted for 244% of home purchases, snapping up all the properties they can get their hands on that are valuated at $300,000 or less, especially ones near school districts and big offices. With a limited housing supply that isn't allowed to grow, because big money pays off politicians to block expansion of new houses, and an ever-increasing demand that is not solely made by people, but by artificial manipulation of buying houses only to rent them at prices not affordable by the common folk, we have begun the early stages of the next housing bubble. We talk about a market crash on this channel in regards to the stock market, but as you see now, we are talking about a housing crisis yet again. Funny thing is that according to consulting firms in the real estate scene, there is more room for this bubble to grow. Ironically enough, the firm starts talking about inflation as well. They expect home prices to rise 12% this year on average, on top of the 11% that it rose last year, and increase at a floor, or minimum of 6% in 2022. Home rental firms have become so profitable they are buying the asked price on all foreclosures and then competing for other properties. In fact, the problem is so bad that many people, strained by the terrible economic circumstances, have been kicked out of their apartments and started living in hotels. As if houses, apartments and condos weren't enough, institutions are now starting to buy hotels and motels around the areas that are experiencing these problems, with the goal of raising the prices. There is a very small ecosystem of houses in areas that big institutions are keen on keeping. That way, they can inflate prices as demand grows, thus creating a bubble. This bubble has plenty of space to grow, so expect this issue to continue to rise unless a market crash happens to burst it for other reasons. What is guaranteed is that this is another stain in the economy that has an expiration. Homeownership is slowly becoming an exclusive club, and will continue to shrink until the 1% makes up 100% of it unless regulation stops them. To anyone minimizing the role of Wall Street on the next housing crisis, let's talk some quick facts. More than 200 companies and investment firms, including BlackRock and JP Morgan, are canvassing all the homes in the United States. On paper, they are competing against families and individual investors, but if you think you can compete with an entity like BlackRock, the world's largest asset manager possessing over $9 trillion, you are deluded. Now, let's me put out a big theory out there to really spice things up. We have seen the problem that banks and hedge funds and all institutions have in Wall Street, especially in relation to the repo markets. As you know, a ton of collateral is being dried up by the Fed, and institutions are finding themselves with too much cash on their pockets, something that is not good because having too much cash with these levels of inflation is going to eat it up. Cash is trash when inflation is so high. As such, one might wonder how can they solve such a huge problem immediately? Well, the answer is right in front of your eyes. Why not start buying up property like crazy, spending all that cash in the housing markets and evading seeing their money and wealth be dried up to inflation? As such, the problems in the repo market have slowly led up to start the next housing crisis, having created a bubble with a ticking time for a huge burst. I started noticing something suspicious earlier this year when inflation started to get a little hectic. I saw a ton of articles come out of the media almost daily, defending BlackRock and other institutions for buying all the houses, with some articles even attempting to make the narrative that renting is actually better for people and not all that bad. That you shouldn't dream of ever owning property because it apparently has no real benefit. Then I started seeing just how crazy the buying started to get, with corporations spending billions of dollars scooping up properties. I have reason to believe that this is no coincidence, and that inflation and the inability for institutions to adapt have caused them to hedge and protect their pockets by all flooding into the housing market. Due to this, and these institutions not wanting to allow a free and fair market to be existent here, they are making sure to invest in blocking the expansion of house creating, regulation and general social welfare. Even with all of this, there is hope. I believe in GameStop, AMC and other meme stocks to be the forces that will help balance things out. I hope I have you guys a bit of insight into the current layout of a big portion of the economic sector. Tomorrow we will start diving way deeper into some of these issues, focusing on certain portions of the aggressive nature by which these institutions aim to destroy your chance to own a house. Let me quickly sum everything up again so that you have a nice recap of everything. The reason why house prices in America are growing exponentially is because they are being driven through artificial demand. When there is an increase in the amount of people wanting to live in an area, the market should respond by increasing the supply of housing to accommodate for this rise in the demand. However, there are many powers in the economic sector limiting and restricting this. They don't want there to be new properties for people to accommodate because it would mean that their artificial demand they have made will weaken with more supply, causing their ridiculous prices to fall and adjust. We have entered a housing bubble since demand is increasing and supply is being blocked from being able to correctly adjust. I have reason to believe much of this is due to institutions having to use their cash to quickly buy assets because inflation is going to eat it and make it worthless unless it's invested in an asset. I hope this little video was helpful. Do let me know what you think of all of this and give me feedback. How do you feel about housing in general? And please feel encouraged to share some of your own experiences in the real estate market and if you have struggled with purchasing or selling a property. If you want to help this channel, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This goes a long way in helping me be able to pump videos out, as I will be pumping 2 videos soon. Enough activities to do this full time to keep you guys informed by making these videos all by myself. Remember to follow me on Twitter if you haven't already, and I hope to see you guys tomorrow. I will see you guys later today for another video, so stay tuned for that. Until then, enjoy the ride that is GameStop and AMC and to the moon.